Good afternoon, everybody. It's Tuesday after the close on May 3rd. Probably a good day to have an after the close webinar. Uh, let's get a little IMing or chatting going on here. Everybody, if you could answer the following question. Do you think the market's a little bit screwy right now? Yes or no? Can everybody hear me okay? Okay.
Yeah, you're coming in.
Everybody on the... I just want to make sure I'm able to see what's going on here. Yeah, everybody seems to, the market is really screwy. It is, okay, so the vote is yes, pretty much quite unusual right now. A lot of good answers, okay. Just wanted to take the poll there and check it out. Yeah, we kind of would agree with you. Very difficult market. Let's take a look at the NASDAQ index here. We'll blow it up. Everybody see my screen okay? Give me a yes. Market doesn't care what we think. Shane, you're a comedian there. Yep, everybody hears me fine. Okay, beautiful. Well, look, here's what happened here. You had 8 days in a row up. It looks like more on my chart because I color code my days based on the close versus the open. If the close is higher than the open, even if it's a down day, it'll show up blue. So in any case, you can see, though, you had 1, 2, 3, 4, 5, 6, 7, 8 days in a row up, and you pretty much just drift straight up off the lows, kind of like you do back in March. And this is a QE market. As far as we're concerned, this is what a QE market does. It just kind of confounds you by drifting higher. You had one day where the volume was stronger here on the gap up, and that looked pretty nice. And so you come up out of this. You didn't really need a follow-through day to resume the uptrend because you really didn't correct very much off the peak here. And after this move here, from here to here, say just above 2,600, all the way up to just about 2,800, you're entitled to a pullback. And then you do this just jam to the upside. You know, if you think you're going to get smart and get short here, this is what happens to you. Anyways, you come up very sharply. You're entitled to pull back. So basically what we get is you get a distribution day today on the NASDAQ. And the NASDAQ really got hammered a lot worse than the S&P and the Dow, mainly because there are a lot of growth names in the NASDAQ, and that's what you were seeing get whacked, a lot of the big leaders on the NASDAQ. And they were getting whacked. So whether they're just temporary whacks or permanent whacks, we'll find out. You can see that the S&P a little bit better. The Dow actually closed up 0.15, but the S&P a little bit better. It comes up, finds support at the 10-day moving average, which is this pink line if you can barely see it. We'll call it magenta instead of pink. And you pull back, you close up off the lows, actually. See here, let's kind of blow it up. But you can see you close in the upper half of the range. So a little bit better on the S&P, holding the top here. You know, NASDAQ's trying to do a similar sort of maneuver here, holding the top of its breakout. And it held the 10-day today and closed above it. So for all you know, just a 2-day pullback, but not all that much fun if you own some of the leading stocks. For us, April was an outstanding month, and the way we play the market, we just need one name or one or two names, and that's really all you need to make a lot of money pretty quickly. And so what we grasped on during the month, obviously, was the move in silver. And what we took position in was AGQ. And we picked it up at about 160 as it was coming up out of this pattern, and it ran it very quickly. And we essentially pyramided a position, and we're up nicely for the year, very, very nicely for the year. Moving along, and right now mostly in cash, because you can see we did have a climax top in the silver here, and you can see it in the AGQ. I'll show the SLV right now, but let me pull that up. So same thing here. Here's a breakout, and this is about where we started buying the AGQ. And we did mess around a little bit, you know, doubling the position, backing away a little bit, doubling it again, and finally getting into gear here. We're really pyramiding on the way up. But I was on Fox last Tuesday, and I said quite clearly that we had sold our silver ETFs. They said silver. Just for disclosure purposes, I do still own physical silver and gold, but I bought that way back in 2000, and again I added again in 2008. So my cost base is ridiculously low. Also, it's a lot easier to unload ETFs. With physical metals, you've got to go to the vault and send the Brinks truck out to get it and deliver it to the broker, unless you all keep it in one place, which to me, I don't trust anybody these days. So it's a little less, shall we say, not a simple matter to unload physical unless you actually store it with the broker that you bought it from, which you can do. But to me, it kind of defeats the whole purpose of having physical metals anyways. But I just wanted to disclose that because on Fox they said sold all my silver, and that's not true. So what's true is we sold our silver ETFs. But you know, that's been like a 5-bagger, 6-bagger for me with the metals in physical. So I guess that makes me a silver pimp, and that's what I've been on Fox for a while. But in any case, you had a climax top here, and the way I looked at it, and Dr. K, feel free to chime in here. I was watching the futures on Monday morning last week and saw them trading 49.82, and we had a target of about 50.50. But the move here is just ridiculous. You're up like 15 out of 16 days, I think, and 8 days in a row here, 9 days in a row if you count the final day up, I believe. 1, 2, 3, 4, 5, 6, 7, 8, no, 8 days. And then you come down, and then you do something that's very common, which is you retest the high. But you notice something here. The silver futures actually don't get past Monday's intraday high, but the SLV does. And to me, that's telling you a little bit of the speculative fervor coming into the silver and everybody getting excited. And it's kind of in your face, you know, as far as a climax top goes. So I hope if everybody was, or if anybody out there was heavy in silver, that they knew, at least after listening to what we put out on Monday, actually, before I went on Fox, was that we felt silver was at a climax top and should be sold. Or at least you want to cut back and lock in some of your profits. Now, 2 days later, we get a pocket pivot here. And what happens here is this is actually a continuation pocket pivot. So the problem is you can't come and initiate a position here because this is not an entry point to start a position. You'd use a pocket pivot within a base or closer to the breakout point where your risk is less to re-enter a full position or just to start building a position, rather. And so here's a continuation point. So all we did is take a 10% position in the SLV, and this is after we spent April pretty much up to our eyeballs in AGQ. Okay, so we're coming back a little, well, not a little more cautiously, but quite a bit more cautiously, simply because A, this is a continuation pocket pivot. It's not one starting out, coming out of the base such as this one down here. Okay, this is where you wanted to start your position. And so what are we doing here? If we take a position here, even if we're adding to our position or just trying to trade an initial small position like we were a 10% position in the SLV, what are we using for our stop? Well, very simply, the 10-day moving average, since that was our reference point for the pocket pivot to buy it, okay? So once we get the close below the 10-day moving average yesterday, for Dr. K and I, it was a very simple matter to watch it violate the 10-day moving average. First day close. The second day or on later days it drops below the intraday low of the first day that it closes under the 10-day moving average. So that's where we're stopped. Boom, we're gone. So we don't own any silver now. We had some SLV. Maybe it comes down and tests the 50-day. Might take a look at it there. But you know, the AGQ position was really what made our month and puts us way ahead for the year. So we're fat and happy. I know there are some people out there who attack us in various places on the internet just because they have a stake in trying to trash us, but that's their problem because it's not going to stop us from doing what we do best, which is making money in the markets over the long haul. And all we need is one of these things to take off for us, and we pyramid it properly, handle the position properly, and it's a big profit. So, Dr. K, you out there?
I certainly am.
You want to go through how we handled this position and how we pyramided it and the algorithm that we used for pyramiding the position? Are you up to that?
Well, I mean, the thing about pyramiding and pyramiding styles and position sizing, it's totally dependent on a person's risk tolerance level. So what I do might not work for a lot of people, and what someone else does might not ever work for me. So for me to sit here and say, well, this is exactly how I bought, and this is why I bought it so many times, and where I bought it, it's based on what works for my trading personality. It's sort of like if you could pull up MCP. I bought MCP 7 times now. And again, that might not work at all for a lot of people. It just happens to suit my style. Someone else might want to have bought it, say, in mid-March on that first pocket pivot, and then there are a couple other buy points where there you could say, oh well, it looks extended. But the important point in pyramiding is that your average cost always remains well below your new buy point. And so, in buying this 7 times so far, each time I'm buying it, my average cost is significantly under where I'm adding a new position. So psychologically, I can buy with great confidence, knowing also that where my sell stop is on this thing is going to probably reverse out. Well, in some of these cases, it would reverse out a lot of my profits, but I'd still walk away either intact or maybe even up a little bit. Now, currently, this type of name, it's pretty wild, pretty volatile. I would be using a violation of the 10-day moving average most likely, because we're coming up on 7 weeks here. And when this thing wants to sell off, it can sell off pretty hard, as we've seen in the past, like in November and in January. So I'm not going to be shy about unloading my position, which has become fairly substantial. But in the meantime, I do believe that the long term on these rare earths is huge. It's a tremendous potential. This is a leader in its space, and I wouldn't be surprised to see this double from here without having to sell it. On a 10-day violation, let's see, we've got 1, 2, 3, 4, 5, 6. We're in the 7th week. So if it completes this week without violating the 10-day, and it looks like it's going to, then I'm going to switch to the 10-day moving average as my sell guide.
Now on AGQ, Dr. K,
double 100 before it does that.
I think, well, that's the price target I've got on it right now on MCP, and that's based on a point and figure chart, which is the same thing I used to come up with the 50-50 price target on silver way back when it was down around $30. So I've used point and figure chart price targets quite a bit. I remember Amazon in 2003. I owned it, and Bill O'Neill owned it, and I was using point and figure, and Bill was using his usual P expansion thing. He came up with $60. I came up with 61 on the point and figure. If you go back and look at the chart of Amazon, it hit 61 and reversed, and that was the top. So we both got pretty close. Bill was using his PE expansion analysis. I was using point and figure. You can combine the two, whatever works, but the whole point of having a price target is just to give you some idea of what's possible, so you try and hang in there. And I think with Molycorp right now, if you do own it, the beauty here, as Dr. K is saying, is that you now are using the 10-day moving average as your guide for a stop and or selling guide. So you need a violation where you close under, just like the SLV did today. Okay, violates the 10-day here, and it closes here. Once it breaks that low, that's your sell signal. So the same thing is what you would use on Molycorp. Real quick, though, I should just transition very quickly over to Jazz. They're coming out with earnings after hours. I think they beat by a couple of pennies. But this violated the 10-day moving average. Remember, it was pretty much following it. Never violated it. It did dip below it a few times, but never violated it for 7 weeks at least. So once it did here, I think you had to be out. And I don't know what's going on this day. A week ago, it looks like somebody with fat thumb. That's all I can say about that. How do you prevent from being part of something like that or owning the stock and getting stuffed out? Well, it's very hard not to. But we saw that happen. There was no news on it. It's just one of those weird things. But here's the deal also. If you knew that this was the close underneath the 10-day moving average, okay, then you should have, or you could have set a stop loss in here somewhere. Not sure where you would have gotten filled, or you could just, as soon as it starts dropping, you could sell it. Now, that all happened in about 2 minutes, so, easier said than done. But once you start getting in this kind of position, you can think about cutting back once it starts to drift below the 10-day moving average. So it might have been possible to act ahead of time if you were keeping it real tight, but Jazz has been a great stock. And the reality is it's held the 50-day moving average despite the big dips to the downside. But Dr. K, do you think it's useful to go through how this was, the points where this is pyramided?
Well, sure. I mean, on something like, first of all, I'm not using HEQ as my guide. I'm using SLV, and I'm also using GLD because those two correlate. Even though SLV tends to trade
right.
GLD. So on something like SLV, I am constantly setting high and low price targets, and when the high target is hit, that's my trigger to go and add to my position. Now, this is not a stock, but it can trade like one. But I also treat it as a commodity. In other words, I believe on a fundamental level that precious metals were going higher, and I'm talking back in January, February when this move started. I mean, we can trace back to September, actually August, September in silver, and that gives me a lot of confidence to say, okay, I can now step in and buy whenever this metal goes up by X%. I can add X% to my position, and whereas with the stock, it still can work. That technique can work, although stock's a bit of a different animal. But in the case of silver, when the price of silver would hit a certain percentage, I would step in and buy more AGQ. Now you can use AGQ as well as your guide. I mean, again, AGQ is just the 2x version of SLV, and SLV tracks the price of silver fairly accurately. So if you assign a certain percentage, you're guaranteeing yourself that every time you buy silver, you're averaging up. You're not averaging down. And when it gets a big move like this, then you'll find yourself buying it up quite quickly and having a fairly substantial position into the climax top. And the climax top was a bit confusing, as climax tops can be. You had 2 days of churning. In other words, a lot of heavy volume without much price progress, and then in between those 2 days, you had a pocket pivot day, and that told us that this move might not be over. In other words, some of these climax moves just go nuts. I mean, silver could have spiked to $60 or $70 before it finally found its top. So you don't want to be left out of a move like that. And so we weren't shy about reinitiating, but we did so with caution. And certainly now it looks like the move in silver is over for now. It's going to be even more volatile than it's been. Gold, on the other hand, still looks viable. So I would keep an eye on gold. Use that as your guide for reinitiating positions in silver. That's what we're doing. In other words, if gold starts to move after settling down here, I would not be shy about reinitiating silver, because silver and gold do track. So if gold goes, I did a study in 2006, for instance, when silver topped. Gold topped about 2.5 weeks later. Now, after silver topped, it lost 20% of its value in 2 days from peak to trough, but then got dragged back up to new highs because gold had not reached its peak yet. So as gold kept going higher, the price of silver also got dragged higher. And so you could have actually, after silver had that 20% correction, you could have gone in and bought silver on the belief that gold was still going higher, and actually done very well with your money in either silver or gold.
So the key here then is, if you're watching gold, you want to keep an eye on gold. If gold starts to march higher, then if silver, and you're pretty much getting very close to 20% down, I believe, off the peak. Let me check that actually.
38.7 on SLV is 20% off the peak.
Yeah, and that would make sense. And we're kind of sitting back waiting for that to come to us right now, and so that's what we're watching. But we also at the same time want to keep an eye on the GLD, because if it does turn and you notice it's holding its 10-day moving average, I think I'm going to make that just a hair thicker for everybody to see. So that's a little thicker now. You can see how it's holding the 10-day moving average, and if it starts to turn out, and silver at the same time has completed at 20%, roughly. Right now it's 16% off the peak. So close enough for horseshoes and hand grenades, as we like to say. It's possible, if you can tolerate a move down another couple of bucks from here, which would be about 5%, that you could actually start initiating a position if it comes down again tomorrow. And after hours, looks like we're just trading. Let's see, the futures are
drifting higher gently.
Yeah,
well, actually, after hours, not really much action going on at all.
No, but so you get an understanding then of how we're looking at coming back into silver. So. Looking at my board, I notice Jazz is up a little bit. First Solar down to 128.55 bid from a 134.66 close. They came out with earnings. Green Mountain, the NCR, comes out and blows out earnings again, and this is what it looks like on a 5-minute. So up 10 points after hours. Now this may be getting climactic, but This had a couple little pockets in here, I believe, right in here, but it hasn't really been holding. Kind of daring you to hold it into earnings with volume picking up today and the stock coming down. But notice that it doesn't look like any 10-day violations at all, actually. So it actually held, even though it's kind of sloppy around the line. So anyway, so that's what we're looking at in terms of the silver and the gold. And that's really been the big play. And like I said, all you really need is one play like this, and you can really score if you know what you're doing. And that's one reason why we don't freak out when we lose a little money in the market, because we always know we can come back and do this sort of thing. And for some reason, we seem to be able to do it time and time again. And usually have our best periods after we have a difficult period. And that's what this is turning out to be. In any case,
I would actually add to that in 1999, that's a good reference here because it was so volatile. And the first quarter, I ran my personal account up about I think I peaked at about 300 and just over 300%, and that was in the first quarter. Now, from that point till October of that year, I had my biggest drawdown ever, and that drawdown was it was right around 50%. But 50% drawdown after being up over 300% means I was still up over 100% for the year. So psychologically, knowing that, I could afford, so to speak, to continue to trade the market without any fear because I had so much cushion under my belt. And then, of course, when in October we got a huge buy signal, then the rest of the year is history. And then from there I went from about 100% to 581% in my personal. But my point is that playing from a position of strength is essential in the markets because it'll allow you to do the right thing at the right time.
So we'll go through some names here. And Ascena, climax top, not a climax top, Dr. K.
It's not a climax top.
I didn't think so either, although it is looking kind of toppy now. But you're up 1, 2, 3, 4, 5 days in a row at the top, at the peak. In what, 7 out of 8, 7 out of 9. To me, it didn't strike me as being all that climactic. Because it's not really a sharp parabola like they generally are. It could be near-term climactic in that you run up pretty good and now you're going to pull back and you have to form a base or something. But I don't know, some of these are getting whacked pretty good, and the way some of the leaders are looking, you could be at some sort of an inflection point, but you don't really know for sure. So you really can't try and guess at it. Right now we have 4 distribution days on the market, some churning days. Dr. K, what were those days actually that you have as churning days?
Well, we had one churning day, which was on April 29th. And then you had 3 more classic distribution days, including today. So that's for a total of 4 distribution days on the NASDAQ.
So we have 4. So here and then here. And before that, you're counting this one and this one?
Yeah, that's right.
Okay. So right now, 4. How many do you need to go to a sell signal?
Well, the 5th one will put the model on sell signal standby, but in QE environment, there are systematic rules in place to prevent the model from issuing a sell signal unless it's very clear it's time to go into a sell signal. Because in the past, what's happened, like for instance in April, if these rules weren't in place, the model would have gone to a sell signal in April, which would have been a mistake. And these rules have been in place just simply because in March of 2009, when QE began, and after a number of months of irregular market behavior due to QE, the model adopted a systematic rule on that basis. In other words, there's something material had changed in the market, so now the model integrates a new rule into its tool chest of rules. And when QE ends, obviously, then that rule is going to be dispensed with. But until for now, that rule remains. And classically speaking, if we got a distribution day tomorrow, and then subsequent days broke below that distribution day, that would normally be a sell signal. In this environment, it's a question mark.
You have to wait till you see it then.
I have to wait till I see it. I have to be in the moment, to see what's going on, input into the model, using the rules to see if it can override the QE effect. Because QE is very, very powerful. It creates a market that doesn't like to sell off very far. And so these sell signals, I've noticed, have been at best very minorly profitable, and it's just often better just to go to cash, and then wait for the next confirmation day on the buy side.
However, you'd have to say that if we were to top in here and start to move lower, you could actually have a good sized downside move, or downside move rather. And so there would be some profit potential, I would think, given the fact that you are extended now. How many months? 9, 10 months off of the about 8 months.
It's an 8 month. It's an 8 month run since the lows.
Yeah, so you could be getting a little long in the tooth and maybe going to correct some, but we'll see. So, but you're still in the early phases of anything here. But it all boils down to what the names look like, and some of them, we saw Baidu or Sina rather. It's coming off. Let me switch back to a daily chart, stock daily chart here. So it's coming off, volume picking up today pretty severely, and it looks like it might want to correct more, but maybe it has to build a base, but you really can't tell for sure if it's breaking down for good. Sohu, similar sort of thing. Now this, I talked about this last week. I said it's a migraine stock. The way it acts is it runs up, and it comes in and runs up, and it comes in and runs up, and then it blows up. And this, to me, looks like it's really starting to come apart. Also looking at NetEase, the 3 big Chinese internets that were doing so well earlier in the month now have all pretty much come apart. And you have NetEase breaking the 50-day simple moving average as well as a 65-day exponential on pretty severe volume. So that, to me, tells you these stocks have some issues. We'll see how they play out, but it looks bad, And other things like look at NetLogic. Movie up today, it breaks. Everybody's been watching this Body Central one, and it's a thin stock, so it breaks pretty easily. Some of the oils will drive you batty because they look strong one day. You have this RPC Inc. It's been a strong one, but it's had some weird moves before, and then it continues to highs here. And this is pretty typical. Stock breaks hard, and then drifts around and shakes you out, and then turns around and goes to new highs, and that's enough to give you a migraine, or at least cause you to tear your hair out. But in any case, it's breaking down here. You also notice, I'll go to PXD. Pioneer Natural Resources was one that was looking good, and it's gotten whacked. Some of these others, CLR was looking good at one point. It's starting to come in. But, the oils in general just kind of junky and choppy as far as we're concerned. Not really an area that we're all too interested in playing. In fact, there aren't that many areas that we're all that interested in playing right now. At least speaking for myself, and I think Dr. K, you're kind of in that frame of mind as well, yes?
Yeah, right now, my view is I'm watching like a hawk on what gold's going to do, because I do believe on a fundamental basis it's going to go a whole lot higher. It's just in the meantime it might decide to do nothing for the next few weeks. I wouldn't be surprised at all given what's happened to silver. And the only thing I really like, I've got a tiny position in gold. And I got a position in one stock that just keeps trending higher, so I'm going to stick with it, and then MCP. That's it. Yeah. And I'm not seeing a whole lot else out there. I think it's we've been in a very treacherous market environment, especially this year. Since I would say November of 2010, it's been very difficult. And when the market pulls in, the leaders get whacked a lot harder than other stocks, and that's a tough environment because you want your money to be in the leaders. So if you're sitting 120% long leading stocks and the market comes in a little bit, the Nasdaq comes off 1%, your leading stocks might come off 4 or 5%, and that's not a very friendly environment to be in. So you've got to be very, very careful with your selection and your level of market exposure.
And just moving down my list, most of the stocks on my list today were down pretty good. Cavium Networks, wide loose pattern. Been trying to make highs. It came out with earnings a couple days ago, and that's breaking down. Everybody's been watching Yoku, but now I think the bloom is off the rose here, breaking down. No earnings, kind of junky. Here's Mercado Libre, breaking the 10-day. Rubin Networks, breaking the 10-day. No violations yet, though. Netgear was looking good the other day on a big gap up. It violated the low of the gap up day. Some have asked us about PPO, Polypore. Was looking good, runs up and smashes right back into the pivot point. Intralinks is a thin stock, breaks out, comes in, breaks out again, comes in. A little bit like Sohu, it looks like. I'd call that a migraine stock too. It'll drive you batty. We looked at Baidu, surprisingly down the least of all the Chinese internets, but breaking the 10-day.
Yeah,
Focus
really
Media has been active
the other day as well.
Yeah, Focus Media has been a leader getting whacked. We already looked at PXD. Walter Energy, pocket pivot here, but it doesn't go anywhere. It moves higher, teases you a little bit, and then smack right back in. Maybe it holds along the 50-day. Rax coming in, it breaks out, gaps up, runs up, comes out with earnings, rolls over, coming back into the base, 3 weeks tight base. But that's not real constructive action. And here's another one that'll drive you batty is Acme Packet breaks out on earnings, gaps up, runs out, and then comes back in the next day and runs up again, pulls back, getting hit pretty hard today. It's right back into the base. Do you buy it here, or is it going to bust? Or it's very difficult to stay with these names when they're doing this. Is Spreadtrum, or I thought it was Spreadtrum, but maybe it's Spreadtrum Communications. Smaller stock, had a pocket pivot in here. Yeah, you could buy it, but you're not making any money now. So, Joy Global. I know that somebody on TV was pumping it here and saying you had to be buying it, and no volume on the rally back up to highs. Boom, they hit it today. Okay, so this is my list of stocks that I'm watching on the long side, and you're just getting a sense of what's going on with this general body or group of stocks. And I think it tells you what's going on underneath the hood of the market. As Dr. K said, it's treacherous. So, but in the meantime, we think that the play to keep your eye on is going to be the silver and the gold play, using gold as your key or your tell or whatever you want to call it, your indicator that silver may be dragged up with it off of a low on this pullback. So, to us right now, in terms of what we're keeping an eye out for as an opportunity, that's one thing we're keeping an eye on. As far as stocks go, it's just too treacherous, and we just kind of blow it off for now, until things get a little more settled in. But the QE factor is probably what creates a lot of funky action and screwy action that just throws you for a loop. So let's see here. Verifone, was acting okay and trying to build a base, and they break it today. JKS, I never really considered that a very great stock, but pocket pivot, solar stock, you got First Solar down after hours. Walter Energy is a coal stock. We looked at that. It's come off. Arch Coal breaking support on heavy volume. And it's violating its 50-day. You have a close below the 50 here, and you've moved below it. So now it's really violating it today on some pretty decent volume. Rockwood Holdings, chemical stock, had a gap up here, Bible gap, but it's just barely holding the lows of that gap up day, which you'd use as a guide for a stop. Informatica, a stock that's been acting pretty well, and it comes off for a couple of days. That's not something to get too excited about, though it's relatively normal. Broadsoft, little thin stock, had a pocket pivot, and it just kind of slumps over, rather. You don't want to be anywhere near miners as far as I'm concerned. We like silver and gold, and we're looking to play those if they start to turn higher again. But the miners, I don't think, are really where you want to be right now. NXPI, I get a lot of questions about this. A little thin, foreign chip company, same thing, not really going anywhere, just kind of screwing around. Amex, I was looking at that a couple of weeks ago, not going anywhere, breaking down. This Click, same thing, thin stock, up and down, so you get a nice roller coaster ride. Athena Health, another one, it's trying to hang in there, but still no, power on one day and just kind of fizzles the next day. Riverbed, one thing I might note about Riverbed here, and I'm just kind of keeping an eye on it, is that if we look at a weekly chart, you can see how many people can tell me what that chart pattern is. Let's see if anybody has an answer. What will you win? We should have a contest one day, Dr. K. Nobody's answering. H&S, that's it. Very good. Yeah, that was hard. Okay. I think we should have a trick question one day and maybe give away some T-shirts or something like that. But anyways, here's what I'm looking at on Riverbed. This is setting up. Here's your shoulder, your head. You know, the one thing about this pattern, though, that I would prefer that it look more like F5, and that is simply because let's get rid of that. F5 is a similar thing. Here's the shoulder. Here's the big head. Now notice how you get this big break. And if you go back and you look at some of the best short-selling patterns, and you can actually go back to the book I wrote with O'Neill, How to Make Money Selling Stocks Short, and you go look at one of the first charts, which is really where Bill initially got the model of this head and shoulders break that really works, is with a stock called Certainty, and it is that chart, the weekly chart of that is in the beginning of the book somewhere. But you get the sense, I tend to like these that have this massive break, and usually when it finally does break, the neckline has a nice move to the downside. Now, notice that F5 is following the 10-week moving average, which corresponds to the 50-day moving average, and looks kind of weak. Tried to come up on earnings and couldn't hold the 50-day. So I don't know if that ends up being a short here, but if the market starts getting more trouble, that is. But, you know, Riverbed, same thing here. They came out with earnings, actually got a bounce off the neckline and the 200-day moving average, which is 40-week line here on this chart. And now they're rolling over again. Volume isn't really picking up, but sometimes it won't. The stock will just kind of peter out, and they'll start to pick up some velocity as it breaks the neckline. But you might want to keep an eye on these, because these are setting up as heads and shoulders pattern on both of them, and so you want to keep an eye on these. And even if you did short them here, you could use a stop maybe here, 5% up or something like that on F5, if you wanted to do that, if you feel that negative about things. But my experience also is that correlating windows of opportunity on the short side is best done when you have Dr. K's model on a sell signal. So you kind of put the two together that way. Also, watch the market here. The market isn't really mimicking the pattern of stocks, and a lot of times what you'll find is that a stock that it starts to mimic the major market indexes as they get weak, a lot of times it's telling you it's going to break with them. And we just actually wrote an article in Technical Analysis of Stocks and Commodities in the May issue, talking about market context on the short side. That's one of the examples of market context we talk about. So if you have a chance, you can pick up a copy at your newsstand. I know I went to the newsstand on Sunday and I bought 3 extra copies to give to Dr. K's mother. But in any case, you can check that out. And so, what's that? What's that?
She loves stuff like that. You know,
Sure
back in the day, I always had to get extra copies of IBD whenever I was in there. All for her.
The life of an only child. So, anyways, where was
Yeah,
it? Okay. Yeah, really. So what you're watching is watch how the market sets up. You know, the market might start to make its right shoulders here, and if it starts to break down, a lot of times stocks that are already in head and shoulders patterns then start to break down. But those are a couple ideas that I'm looking at right now on the short side. Okay, and if we look at let's see if I get this straight. Keep these guys organized. Uh-oh, where did my daily chart go? Here it is. If we look at you can hear the crows outside. I'm not sure what's going on today. There's a lot of crows outside. My wife did throw a container full of ladybugs out into the yard, which then attracts smaller birds, and I wonder if the crows go after the smaller birds. But the birds look like they were having a pretty good lunch today. I think not really the best time of the day to release ladybugs into your garden. But in any case, getting back to the matter at hand, looking at F5, you see it's below the 50-day moving average. So I'd look for some kind of a bounce up here if I was going to short this one, but that's not really clear. It's kind of in no man's land right now, simply because the market hasn't rolled over. And Riverbed, same thing going on here. You know, this could diddle around for a long time, but I would keep an eye on these things, and then you want to sync it with the market. Okay. Massey Energy was a coal stock that was starting to look okay. I think this is not a pocket pivot, so really nothing, but it just kind of slumped over. Cephade was looking pretty good, and today it slumps over, but nothing, you know, really too serious. Could just be with, you know, doing this thing with the market, but the market was all over the place. Contra Research, another oil breaking down. This Momenta Pharmaceuticals ran up. You had a pocket pivot in here. Thing ran up and pulling back. They're in a lawsuit with Teva, so you're basically gaming the lawsuit. Agco was looking good. A gap up here is kind of violating the low of the gap up, but that wasn't really a powerful gap up. It's trying to break out of this base. It's having some trouble. Lulu. Okay, Lulu. If Lulu was going to really move here, I would have expected it to move to the 100 level and go. That's the first time it's ever gotten there. Use the Livermore Century rule, where once it gets to a round number like 100, 200, 300, it should move through there pretty forcefully. And it didn't do that, so it's kind of slumping a little bit. But it's way up there, and it could be at a late stage. Don't know. But if you own it and you're up on it, you're okay on it so far. And you're using your 50-day moving average really as your selling guide. So that's kind of what you have to do, and just see where things go. Like I said, you don't know whether we're at a market top. You don't know if the market's going to go higher. You really don't know for sure. So you do have to give your stocks a little bit of room. But for our money, stocks are more a pain in the rear right now than anything else. Same thing with Rio. Some people looked at WAPCO. It's been acting well. It's holding up okay. It's staying above its 10-day moving average. Under Armour, it's really Under Armour now. It's more like body odor, BO. That's what it smells like. Coming down to the lows of the base, maybe it finds support along here. But this could be a late-stage failed base. Now, it trades about 923,000 shares a day. I like to see 1 million shares or more if I'm going to short something. And kind of watch how something like this trades before you try and short it. But you may need to do a few back and forth moves up here. But that's one to put on your list of leaders that have failed. Let's see. I'm going to come up and pick out some more here. All the FERTs are looking weak. AGU rolling over today. Hot rolling over. This Terex, doggy stock. And it's just the whole list. Just kind of looks. It looks feeble at best. Price line, okay, been going up on no volume. I don't know. Now it's coming below the 10-day. Doesn't tend to follow the 10-day, but it's just kind of slumping along with the market. We looked at JDSU. Remember last week I said it looked like it wanted to move higher, and that's what it's done. But I think earnings come out tomorrow. The way the market's acting, who knows what it would do, but I wouldn't be buying it. Vale, same thing, rolling over. Netflix, so far it's held the 50-day moving average. So I think one of the problems with Netflix is that it's overplayed on the short side. In other words, there's too much short interest, and so that puts a little bit of a floor underneath the stock. I would watch, though, to see if it breaks the 50-day moving average. And if you start to see more of this kind of stuff going on, then it's telling you something about the market. Look at CMG today. It comes down, breaks for the first time, drops below the 50-day moving average. That's the blue line. But it hangs in there, and it hasn't violated yet, so we'll see what happens. But again, there's another example, and you're starting to see more of these. Deere was looking good, rolling over today just a little bit. Yeah, some of these others, Peabody, another coal, Fortinet, and a little bit. That's Fortinet for you. It tends to be volatile. You have a viable gap up. It violates the low. Now, this is an example of a stock. It's thinner than your average stock, okay, your average technology stock. Smaller stock, thinner stock. Gaps up. You could give it a little porosity because notice here it does intraday. It falls below here, but closes above the low of the gap up day. So, it's possible. Even if you felt like buying, you could buy and use that again as your stop or use the low here as your stop. But that sort of thing will confound you, but very typical for Fortinet. Tibco just kind of pulling down. It's been acting okay, so not too much wrong there. Eastman Chemical, another chemical stock like Rockwood Holdings coming in. The one that's really acted pretty well lately is LyondellBasell, and I remember buying a little bit of it down here, and it runs up a little bit and reverses yesterday on the earnings. Acting okay. Is that the other stock you own, Dr. K?
That would be it. That would be the one. It's kind of a quiet mover, and I've had it for a while. Bought it. I think I bought it 3 times now. So it's not a, these are little positions every time I'm adding to it. So it's not a huge position in my account, but it's probably about 30% right now. And if it keeps moving, I'll buy it again.
That's good so far.
It holds the 50-day really well. So my view is to my average cost in this is such that the 50-day should catch up to it. If it ever does violate the 50-day, I would imagine I would probably just close out the trade on a very small profit. The idea being that it won't be violating the 50-day anytime soon. unless of course the
It doesn't look like it wants
goes
to.
real bad.
Right, it doesn't look like it wants to. It tends to be pretty even. We'll see how that goes, but so far so good. Cummins engine, it's going to rock through some of these. Holding above the gap up day, so that's still okay. VMware blew out below the low of the gap up day. In the portfolio simulator, put a stop loss order in at 91.50, giving it a little bit of room, and it got executed. So the portfolio simulator is out of that stock, but still owns AutoZone, which amazingly was up for the day, and Oracle, which has been acting very well and has continued to make new highs. It's now up. These triangular marks here are ants, I call them, and they mean that the stock has been up 12 out of 15 days in a row or better. So Oracle's acting pretty well, but it's the granddaddy of cloud computing stocks, and a very stable earner. It's the type of stock that in an uncertain environment I think institutions tend to flock to. And you've seen them buying some big caps, like you see them buying DuPont, but it's not really going anywhere. Let's move through some of these other ones. Open Table today really got whacked. Tends to follow the 50-day, so that's what you're using as your selling guide. That would also be a breakdown roughly through the top of this base if that occurred. So you're getting some heavy selling coming in. Doesn't look all that great, but if you're going to stay disciplined, you would use a 50-day as your selling guide. And you remember, this is a market that tries to buck you. It tries to throw you off. Wynn Resorts holding the 10-day. So nothing too bad today. Not a lot of selling volume today, you can see. It hung in there. So that's one of the better acting stocks today. Las Vegas Sands got hit today on some volume. You got a pocket pivot here. It's still holding above the 50-day moving average, which I believe is what you probably use as your selling guide if you bought this pocket pivot. Let's see. Feel free to interject anything you got in here, Dr. K. Let's see. Panera Bread, not really doing too much. Altera has been a very strong stock, gapped up here. Earnings came out, moved higher. Notice you're not getting a lot of selling. Pulls back towards the 10-day moving average. That's one of your better acting stocks right now. Decker's got decked after earnings. I've been wanting to say that for the whole webinar. But down into this base now, it's violated the 50-day moving average. You would probably, this is a tricky one. Dr. K, how would you, let's say you own this and you were not quick enough. Remember, Dr. K has said this many times before. You have a stock gap down on huge volume, he's selling it right away. So if you were doing that on deck, as it was getting decked 3 days ago, actually it would have been Friday, so 5 days ago, you got out of the stock here, and now you violated it. So, Dr. What do you think here? What's the sell or buy? Buy, sell, or hold?
Sell. No question. I mean, the stock, you should have sold it on the first day at the open. Okay, so it rallies up above the 50-day there, but you just get rid of it. And if you still have it, you should just dump it tomorrow at the open. Get rid of it. It looks horrible on the chart. You don't want your money sitting in a vulnerable position, and that's what this stock is. It's very vulnerable right now.
ACOM, Ancestry.com, big gap up. Oh, what a fun stock. Big move. Hope you sold at the peak. Now it's coming in. Volume was up, but this is a thinner stock. It could be all over the place.
That's an interesting stock because it was up 42% by the close on that gap up day. And my strategy, because I have gotten lucky once in a while, sometimes you hit on a stock and it just goes up crazy like this for no particularly good reason,
So you could have bought this on the opening somewhere around down here.
Well, wherever you bought it, I mean, it closes at the peak. It's up 42% for the day. And what I would do is I wouldn't be selling it that day because you might get another crazy day like that day. So, but what I would do is on the next day when it doesn't have any more momentum and it's coming off, I would just take my profit, most likely. I mean, and you can see that the volume is not small exactly, and now who knows where it's going to go. So, in other words, don't get too greedy with these things, but also don't be too quick to sell because I remember there was a couple stocks in the 90s that were like that. They would go up 3 huge days in a row, and I created a rule: if a stock goes up 3 massive days, 3 huge days in a row, when we're talking over 10% each day, by that third day, make sure that your sell stops are super tight on the thing because you want to be able to keep most of that profit.
I think that Dr. K, you said something there.
Afterwards.
There's one thing you said that was in the 90s. I don't know if stocks do that all that often like they used to in the 90s.
Yeah, once in a while you get lucky. It's pretty rare in this decade that you get three huge days like that. It's a lot more rare. And if it does happen though, I think the same rules would apply, and that is, assume that after those 3 days a stock is done. I mean, how many stocks can go up more than 10% each day for 3 days?
Yeah, right about at the point where you start to think you're going to buy an island to go move on to. That's when you sell it. So let's see, what else is going on here? Apple is a big NASDAQ stock. They cut the weighting in the NASDAQ 100. It's holding the 50-day. And you actually have a pocket pivot here, which also is technically a viable gap up. Not the most impressive viable gap up, but technically was one. Actually, would that be it there, Dr. K? That would be it right there, yeah.
Yeah, that would
be it. And then you have a pocket pivot here. So at the very least, it's a pocket pivot, and this is also 2 pocket pivots, but it isn't going anywhere. Kramer was out last night saying it's going to hit 400. Who knows? It doesn't seem to want to go down, and I think as long as it holds the 50-day moving average, it's okay. When you get a violation of that, then you may have some problems, and that may also coincide with problems in the market. So maybe Apple's something to keep an eye on in that regard. But in other stocks that were a little bit funky here is Amazon gets turned away at the 200 level. Doesn't mean it might not make another run for it, but again, you can use the century mark rule, Livermore's century mark rule with the 200 price level. Although Amazon did get higher than that back, I believe. No, maybe not. No, it's actually at all-time highs, I believe. Yep. Let's see. Let's go all the way back.
Yeah, it is all-time.
Yeah. So it's at all-time highs. So theoretically, if it can get through that 200 level, it should be able to push through it pretty good. But so far, it has not really been able to today. But that's kind of a market problem. The Nasdaq got hit the most today, as I said, and that's really the problem there. I was looking at some stocks, CRM, for example. It pocket pivot here, but no juice. No going nowhere. So it's just kind of sloppy. So I feel like just going through these names, you just get an idea. Citrix Systems, gap up, but it violates the low of the gap up. So you're seeing a lot of action that's just kind of fizzling out. And I don't know if this tells you something about the market. So we're just playing back here. If you got a couple of positions that are working as we do, then you hang back and let those do their thing until they force you out. But I think, what do we like here? Well, MCP is acting okay. You had a pocket pivot today. You could initiate a position here, and you are using a violation of the 10-day moving average as your stop, okay? And that's pretty easy because your risk is relatively low. Go ahead, Dr. K.
Yeah, and then I sent out that report very early today, just shortly after the open on MCP, because I put a couple factors together. First, the news that came out from the New York Times. Second of all, the MCP technically was in a perfect position to rally off this little island. And thirdly, the amount of volume coming in at that point in time was enormous. I think it was something like 700%, 800% over normal. So I put all those three factors together and said, look, you could initiate a position here. It's very early in the day, but my guess is that this stock is going to beat its pocket pivot volume required. So, sometimes you can get a jump on these things by buying well ahead of the actual pocket pivot volume requirement. And that would, when I sent that memo, that was my first buy, and then when it proved out, I bought it actually a second time. I bought it 3 times today because each time it kept proving out to add to my 4 prior
on strength. Yeah, good move. I'm looking at GMCR trading 76.04 bid. LVS after hours getting clocked down to about 41, down about here. So breaking the 50-day moving average. So that's not what you want to see here. But if you got in on the pocket in here, you're doing okay. You're not that far off. Let's see here. What else? So MCP looks okay, and you have that ready sell guide if it violates the 10-day moving average again. We are watching silver here on a 20% pullback right now. You're 16% off the peak, and we're going to watch this in tandem with gold. If gold holds up well and starts to turn back to the upside, then we might consider, well, we probably would come in and take at least a starting position back in the SLV, or if you want to get real risky, the AGQ. I like the AGQ, Dr. K. That's my favorite one.
That mine as well. I mean, it really.
Before we go, though,
value, it's amazing.
Before we go, let's look at. Somebody says chart stuck. Not sure what that means.
I'm seeing you have TNA on right now.
TNA, yeah. Somebody's asking about TNA. Dr. K, what's your take on TNA?
Well, TNA has the best risk reward of these 3 times ETFs, TNA and TZA. And so since my model is still on a buy signal, although a weaker one than before, but it's still a buy signal, where the TNA is tracked on the website as well as TYH. But I prefer TNA because of the risk reward. And so, if you're bullish on this market, and you want to be aggressive, you can go with TNA.
How about IWM? Same thing, really. Not too much. Somebody's making a note here, and I think this is good news to pass along. Thanks, Richard, for alerting us to this. On May 11th, MCP has a 39 million share lockup coming up. I don't know. There's one thing I'd point out about this. I remember Krispy Kreme donuts, and let me see if I can go back to this, and I'll show you. And this is why I think lockups. You can be aware of them, because if the insiders do start unloading, and they're very aggressive about it, it could be a problem. But I remember Krispy Kreme coming out in 2000, and back then it was like the only thing that was working. And right about in here, right about in March, April of 2001, I remember I was at O'Neill, and I was head of the institutional advisory group, actually. And one of our hedge fund clients called me up. You remember Aaronch, Chris?
Of course.
Yeah, he called me up and he said, we're shorting Krispy Kreme because the lockup is coming out, the expiration, the insider's going to be dumping the stock. And that happened right about here, okay? And I remember looking at the chart pattern and looking at this base and thinking, there's not a lot of selling in here on the weekly chart. I remember thinking that if it's really going to be that bad, wouldn't there be more selling leading up into it? Maybe somebody knows something, I don't know. But you just watch the stock, and you don't watch necessarily if there's a lockup. That may come into figure, in the MCP's behavior, but you wait for the stock to tell you. And I think if, in fact, a lockup causes some problems for the stock, you'll have a very simple 10-day moving average violation. So I would probably operate on that basis, not try to anticipate it, because sometimes you'll end up blowing out a position just before it has a big move, because a lot of people start shorting the stock thinking that it's going to come in. And that's what happened with Krispy Kreme. And I just remember it, I bought the stock here and it had this nice run up very quickly. It's doubling in almost nothing flat in like a few weeks. So there's a really nice move. And one of the things that led me to buy it was when our hedge fund client called me and said, oh, this is, this company's in trouble, lockup's coming out. Now, you look at the base, and the base doesn't seem to really be telling you that too much, because it's not breaking down, holding lows. And when it turns and breaks out right here, boom. That thing was out of there. A little pullback for 1 week in here, but after that it's gone. So I just remember that. I just passed it along. But I think it is helpful. Thanks, Rich, for passing it along, to know that there is a lockup, expiration, lockup here, whatever, where insiders can sell stock. Doesn't mean that they're going to, and it doesn't mean that they're all going to pile into the market at the same time. And if you get too many people trying to anticipate that, then I think it could be problems for shorts if you want to do that. Let's see. How did Dr. K's ZSL trade? I'm the one who did the ZSL. I went 200% long the ZSL, and I'm going to buy a small island now. Thank you. I don't know how did it's so far it's working, but the premise here is that silver will come 20% off its peak, so it's getting close to a cover point, or a sell point rather, if you did buy it. So, yeah. I don't know. Well, what would you do with this, Dr. K?
Well, I'm tracking gold and silver, and silver is getting very close to where I would start buying it if it comes off closer to that 20% point. So I mean, you're sitting on profits in ZSL. That's great, but don't get greedy and keep your stops really tight on this one, because when silver reverses back up, it's going to reverse back hard.
Very sharply, yeah. And you're also, this is good for a quick trade, but you're really, what you're saying here is if you think this is going to go up a lot more, what you're saying then is that silver is just going to blow to pieces and it's heading down, here. It might get right around here on silver on the SLV is where we're looking to come in, somewhere right in this zone, maybe another buck or two down. About 5% down more, so 4 or 5%. So just watch this tomorrow. Right now, silver is after hours trying to rally a little bit off the lows, but not really too much there. So that's kind of what we're looking at right now. Some of these freestockcharts.com is great. I'm canceling stockcharts.com. I actually have all those. I like stock charts. I like free stock charts. I like charts, so I subscribe to pretty much every chart service on the planet. So if anybody's really desperate to use a chart service, maybe you can use one of my extra ones. I'm just kidding. But those are all good. But I think stockcharts.com, for what you pay, I think what you get is pretty good. And free stock charts is okay. It's not. I think stockcharts.com is a little bit better. But, for nothing, I think they're both outstanding. So anyways, I think that's all we have. And so you kind of know what we're looking at here. We're not really all that keen on stocks unless you're playing the right runs like MCP or LyondellBasell or whatever else is working, which is very far and few between. You're going to have a huge gap up in GMCR, but I don't really think that that's going to be all that viable tomorrow. It looks like over 20% right now, beating 77.82. Boy, they got some short squeeze there. That's probably what's happening. LVS getting hit after hours. Jazz up at 32.25, so it's up about a half a point after the close. Fizzler getting hammered now, 124.52. So, it's treacherous when it comes to stocks. If you're in the right one on earnings roulette, you win. Red 19. That's a little inside joke. But in any case, okay, we'll do that. We'll try to find you another teasy of some of these estimates. So, okay, we're working on that. We'll see which one we find. But I don't know. Right now, the market stocks look dicey. We like, we got the play on silver, and that's about it. So, any other questions? You guys know where to email. And thanks for listening. We'll catch you next time.
Take care, guys.